let's get you the new offering that CNBC-TV18 has, which is macro signal. What we basically do is isolate the macro forces that matter for the day and explain how it translates into market moves. So is there something in the macros that are impacting the markets right now or not? Or what are the important trends that we're looking at in the macro space? Ritu, as always, is with the latest on this one. Ritu.
Mangalam, let's start with a quick broader check, a daily dashboard of all the action. The markets, like you said, continuing to trade under pressure. Even in the last hour, we've continued to see a downward trend on the broader indices. The Nifty now trading with cuts of 166 points, the Sensex down about 442 points, and the Bank Nifty, again, trading with deeper cuts of about 240 points. That's as far as the market is concerned. But let's also take a look at the money markets, etc. Rupee, for instance, let's bring that up. The rupee is now trading at 89.82 as we speak. It appreciated tracking those upbeat numbers, for the first advance estimates for FY26, but then trading lower. And that's more or less in line with other Asian currencies. The 10-year yield, that closed flat yesterday, again, trading at similar levels. 6.62 is where the yield is currently at. Let's also pull up the oil prices. Again, we've seen a bit of a decline because of concerns of oversupply. We had comments coming in overnight from, the U.S. president reiterating, Donald Trump, how, with control of Venezuela, a larger supply of 30 to 50 million barrels a day is what he was talking about. I don't know if the market believes that number, but generally the trend of oversupply is what is putting a downward pressure on the oil prices. But, that is the broader daily dashboard. We'll zoom in on one important indicator for consumption, and that is the credit card data that the Reserve Bank of India releases on a monthly basis. On one hand, you have the big numbers, the GDP trends that are showing you a 7.4% growth this fiscal, nominal GDP softening to 8%. But is that being supported by data on the ground? Now, credit card spending, that shows that spends remained in double digits as per the last data we got for the end of November that RBI has now released. But the pace is definitely cooling down after that post-festive season as normalization is starting to set in. So for November, credit card spends rose about 11.5% year-on-year at 1.89 lakh crore rupees, but they've fallen 12% when you look at them sequentially. Now, that is because of the normalization after that demand, not really a slowdown in underlying consumption. But what is important to note is that this 11.5% year-on-year growth that we're seeing is double the pace of the kind of growth that we saw in November last year. And that is because there is one, higher card penetration. There's sustained e-commerce spending that just continues to be on rise. In fact, more than 60% of the spend are coming from that online spending. Now, the moderation is visible in per card spends, though, where the average spend per card has fallen to about 16,470 in November, which is down 13% from the peak that we saw in October. But that's, again, the festive season peak, still 4% higher than a year ago. Now, this is reflecting a shift away from the high volume festive purchases. And now there's greater use of EMI conversions. There's tighter underwriting as well because of the rising delinquencies in the unsecured segment. RBI has also been warning about, and the substitution of UPI. When it comes to low ticket spends, you're not really swiping your credit card anymore. You're just scanning the code to pay through UPI. Now, private sector banks, they continue to dominate the credit card spends, but the gap is narrowing, and that is an important indicator. For instance, in November, private banks accounted for nearly 74% of the total spends, although their share has fallen by 160 basis points over the last year. Public sector banks, meanwhile, have been able to increase their share to about 20.8% on the back of some aggressive issuances we've been seeing from the large public sector banks in the mass and Crow-branded segments. Now, despite this shift, the market is very concentrated because just 3 large private banks and 5 large public sector banks account for nearly 80% of the total spend in this market. But there's also a clear convergence that is underway. Private bank per card spends, they stood at about 17,000, up modestly year on year. But public sector banks are also seeing a jump, 21% in fact year on year, with the per card spend rising to more than 14,000 rupees because newer cardholders increase the utilization, and digital engagement we've been seeing that continues to improve even for public sector bank customers. Now, both in spends and the card issued, HDFC Bank remains the market leader if you have the data up on your screen, followed by SBI Card and others. Not very surprising there. That consolidation trend continues.